Is Nvidia undervalued or not? That was the question we tried to answer in part 1 of this series. In part 2, we're going to focus a bit more on the competition, the competitive landscape of Nvidia's market right now, whether or not that's one of the biggest bearish points one could make. And one could say, maybe yes, it's a valid point, and that's why right now at over $700 and something, for PEs of over 36 times or something like that, Nvidia is overvalued. On the flip side, we're going to try and make the case as to why Nvidia will still remain the number one player for years and years to come. Of course, do share your opinion down in the comments below. I know a lot of you are owners of Nvidia or owners of TSMC, ASML, AMD, Intel, Qualcomm, you name it, all the other competitors out there as well. So do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I first want to start off with the competition. The likes of Meta, Amazon, Microsoft, Apple, Alphabet, basically the biggest clients for Nvidia and the moves that they have been making recently. I'll first start with Amazon, which said it would invest up to $4 billion in Anthropic, a startup working on artificial intelligence. Amazon said they wanted to create a viable competitor to chip maker Nvidia, a key partner and kingmaker in the all-important field of artificial intelligence. The boom in generative AI over the last year exposed just how dependent big tech companies had become on Nvidia. They cannot build chatbots and other AI systems without a special kind of chip that Nvidia has mastered over the past several years. They have spent billions of dollars on Nvidia systems, and the chip maker has not kept up with demand. So Amazon and other giants in the industry, including Google, Meta, and Microsoft, are building AI chips on their own. Remember, Nvidia does not make the chips. TSM makes the chips. And so the capacity at TSM has to be going up and up and up in order to keep up with demand. If that doesn't happen, there's going to be more demand than supply, and then maybe in some quarters you would see things fluctuate. Again, this is also a cyclical industry. I know someone in the previous video has made a comment on the fact that data center is not really as cyclical as gaming GPUs, CPUs, and stuff like that. Data centers over the last decade or so have been going up quite steadily. Maybe he has a point. Continuing here, what's revenue to Nvidia is a cost for the tech giants. Orders from Microsoft and Meta made up about a quarter of Nvidia sales in the past 2 full quarters. Here's a picture with the other players there as well. Now, by the way, we're not just stopping at the fact that Nvidia's customers are trying to tackle the issue that Nvidia is solving. No, Nvidia is also tackling the issue, well, not really tackling the issue, but Nvidia is also playing around with cloud services. So last year, Nvidia started its own cloud service where businesses can use its chips, and it is following chips into a new wave of cloud providers such as CoreWeave that compete with the big three, Amazon, Google, and Microsoft. CoreWeave is basically this, the GPU cloud. It's a specialized cloud provider delivering a massive scale of GPUs on top of the industry's fastest and most flexible infrastructure. A bit more on this particular move a bit later in this video. Going back to the big tech companies that have started to design their own chips, so we know that Apple, the last couple of years, they moved away from Intel completely, focused on their own silicon, the M series for MacBooks and iPhones. Google has done the same for the last couple of years. TPUs, the tensor processing unit, they've done it already since 2017. Amazon is now on the second generation of Trainium, its chips for building AI systems, and has a second chip made just for serving up AI models to customers. In May last year, Meta announced plans to work on an AI chip tailored to its need, and in November, Microsoft announced its first AI chip called Maya, which will focus initially on running Microsoft's own AI products. And so, of course, while they are still big customers of Nvidia, they don't want to depend solely on Nvidia and pay the big bucks just because they haven't done anything in-house. No, they're all starting to move not away from Nvidia because they still need it. I mean, we've seen how much Meta has been spending on Nvidia in the last year or so. So they're certainly going to stay huge clients of Nvidia. But on the flip side, for other things, maybe they can rely a bit better on their own chips. They know what's best for them. They can drive down the cost as well, and then maybe offer it to some of their customers as well, whether it's Microsoft, AWS, or Google Cloud, you name it. Now, what's the big deal here? Well, the big deal here is that Nvidia not only sells hardware, but the big trick here is the ecosystem. And that's what they've been building up for the last couple of years. That's what made them number one in the world right now. Not in market cap, no, in this field. It's mixing hardware with software. It's the fact that when you offer a service, if suddenly you go the way of Trinium, you go the way of Google or Microsoft, you name it, you then have to start coding differently, right? With Nvidia, since it's the most popular solution out there, or at least one of the most popular solutions out there, usually people would say, I don't really want to change my codes. I don't really want to change the way we've been working for quite a while. And so we'll continue to use Nvidia. That's a big advantage. And then, of course, at the end of the day, price matters and computing power matters as well. Now, if in the future, somehow the companies offering different chips can make it so that the code translates or changes and does the exact same thing on their own chips, then maybe the answer will be different. But right now, the fact that Nvidia is offering software mixed with hardware or hardware mixed with software is a huge advantage for them. Moving on and circling back to what I said before, big tech companies, customers of Nvidia are working on their own chips. But Nvidia itself is not sitting on its hands and doing nothing. No, apparently, according to this report, Nvidia wants to work with the world's most powerful tech companies to make customized AI chips. So, according to this report, again from Reuters, it's held talks with leaders from Meta, Microsoft, Google, and OpenAI to build custom chips for data centers, two sources told Reuters. The discussion comes as Nvidia plans to build a new business division dedicated to designing such chips and AI processors for cloud computing companies. And in 2023, the custom chip market was worth $30 billion. Big players there are Marvell and Broadcom, among others. So as you see, while there are some valid bearish points or concerns, let's say, with regards to the fact that Nvidia has gone up already so much, and the competitions and their major clients right now are making moves towards designing their own custom chips, Nvidia itself is also trying to get its, let's say, claws into another market that is worth quite a lot. The last couple of things here is a small recap of what we can expect next week in the earnings report. So the outlook for revenue right now sits at $20 billion. I've seen already a couple of analysts saying that it will probably be a bit higher. Gross margin, 74.5% GAAP, 75.5% non-GAAP. Now, with revenue, we're exiting fiscal year 2024 at $20 billion. So if you annualize that, you're getting a minimum, let's say, of $80 billion. Let's have a look at what the analysts are expecting for fiscal year 2024. Well, as you can see, in fiscal year 2024, sales is expected to reach $92.73 billion, growing 56.94% year over year, and EPS growing 69.36% to reach $20.88. As for fiscal year 2026, another 21.74% growth year over year, reaching over $112 billion, and EPS growing 23.52% to reach $25.80. Now, if you look at the estimates for fiscal year 2025, right now they sit at $92 billion. It's pretty crazy to think that back in June of 2023, the estimates were around $37 billion. So again, if Nvidia suddenly comes out and say, okay, we're guiding for another 30-50% quarter over quarter growth because demand is just so high, expect these estimates to go up quite drastically. And so valuation, yet again, might look extremely cheap, let's say. Now, finishing off by looking at the graph, this is, by the way, on the daily, just to show you that we have been overbought for quite a while. Actually, since the start of 2024, we have been overbought, and yet the stock has gone up, close to 50% or so. So The message here is the market can stay overbought, or specifically a company can stay overbought much longer than it should make sense. If we look at the weekly, same thing here. We have been overbought on the weekly since the start of the year. Right now, the 200-day moving average sits at $458. The 50-day one sits at $586, and the 20-day one sits at $655. So that will be it for this video. To conclude, to be honest, this is one of the most interesting companies and situations to study, because unlike many other companies that have gone up extremely fast, that had been overbought, many of them have come crashing down because it just doesn't make any sense. Nvidia, on the other hand, keeps on executing, keeps on surprising myself. I know, back at around $500, I said the upside, in my opinion, is a bit limited, but I guess the market did not agree with me. I mean, it did agree for, I think, 6 months or so, but right now, since 2024, semiconductor companies such as Nvidia, supermicrocomputers, ARM have soared. Let's see what happens next, but it's definitely a very, very interesting investment case to study very, very closely, because yes, this can be looking like a very expensive company, but if the business continues to execute, then I see nothing wrong with that. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.